Hello and welcome back, guys. So in this particular session, what we will be discussing about is that borrowing cost. Okay, so what we've been given is that basically we will be given a question where we need to determine what will be the borrowing cost that needs to be capitalized. Okay, so it could be any. Okay, so let's first of all look at the standard definition of borrowing cost. So the standard definition of borrowing cost is borrowing costs are defined as interest and other costs that an entity incurs in connection with borrowing of funds. Okay, this is as per IAS 23 paragraph number 5. Okay, so borrowing costs are, what is it? It's interest and other costs that an entity incurs in connection with borrowing of funds, anything relating to borrowing of funds. Okay, so in this definition, what we need to basically be thinking about is that basically we need to define qualifying assets. Okay, so what are qualifying assets? So qualifying assets is an asset that necessarily takes substantial period of time to get ready for its intended use or sale. Okay, so it basically takes a lot of time, okay, for it to be uh, ready for intended use or sale. Okay, so let's just like building land, right? So vehicles. So what about recognition? So whenever we are talking about borrowing cost and its recognition, what we need to basically be careful about is that borrowing cost is only capitalized if they relate to acquisition, construction. It could be other acquiring, right, purchasing, or you're constructing or you're producing of a qualifying asset. So what is qualifying asset? Which takes substantial period of time for it to be ready. Okay, so basically such as building or any kind of plant, right? So whereas what is the definition of borrowing cost? Borrowing cost is any cost, uh, interest cost and other cost that is associated with borrowing of funds. Okay, as you can see over here as well, it is as per the definition of IAS 23 paragraph number 5. Okay, exactly, if you want to quote it, you can quote it as well. Interest and other costs that an entity occurs in connection with borrowing of funds. Okay, so similarly, borrowing cost is only capitalized when the construction is in process. Okay, so basically you can't capitalize it if the construction is not happening. Okay, so that's another important criteria, okay, of recognition. So similarly, what will be the capitalization period? Okay, so your capitalization period could commence when all of the following conditions apply. Okay, so what are the condition is that basically the expenditure is being incurred. Okay, so if your expenditure is not being incurred, and then you can't actually capitalize that cost. Okay, so your expenditure for the particular qualifying assets that you are constructing, acquiring, or producing should be incurring as well. Your cost should be being incurred. Okay, so similarly, in case of borrowing, cost is also being incurred. The interest is being charged by the lender. Okay, so the lending fees are being charged. Okay, so similarly, the activities which are necessary to get that particular assets ready for use are in progress. Okay, so basically all the activities like getting the materials into the site, right, and organizing all the workforce for that particular asset to be completed within a particular time is being done. Okay, that is another crucial important thing that we always need to remember whenever we are talking about capitalization period. It's always expenditure of assets is being incurred, which is basically the like your purchasing the materials and all. The expenditure is being incurred, right, and then the borrowing cost associated with that particular asset is being incurred as well. The lender is charging its interest. Okay, so similarly, third criteria will be activities that are necessary to get that particular assets is already are in progress. Okay, so basically what that basically means is that the manpower and then assets, all this raw materials, right, all these things should be arranged, or the activities that are necessary is being arranged, or is it in, it's in progress. Okay, it's planned. Okay, otherwise you can't just leave that particular place without required materials, right? So similarly, when we are talking about capitalization, right, borrowing cost, what we need to basically be talking about is interest rate. So there is basically two types of interest rate. Okay, so basically, first is specific borrowing, second is general borrowing. So specific borrowing is that you're borrowing just for that particular asset only. Okay, so basically it will be the rate that you capitalize it will be the same as the rate that is being charged by the bank to you. Okay, so in case of general borrowing, what we basically do is that, so we have our general borrowing, right? So we have let's say loans from two different banks. So how do we basically assign interest rate, right? So the two banks might have different interest rate, right? So in that case, what do? We use weighted average method. So you might say how, right? So we will look at that in the next slide. Okay, so I'll be teaching you how to basically how to account for it using weighted average method as well. Okay, so another important thing is basically, so you might make an investment as well, right? So the amount that is to be capitalized is that the interest payable on that loan, and then the income on that temporary investment. Okay, so basically whatever interest that you have to pay less your interest on that particular amount shall be deducted, then only that amount will be capitalized, okay, on a net basis. Okay, always remember this, because let's say you've started your construction from let's say 31st of March, right? So during that period, so for the 3 months, what you will be doing is you'll be earning some interest, right? So what we will be doing is the interest cost of that of on the principal, and then deducted by the interest earned on that 3 months period, and the rest amount, the net amount, will only be capitalized. Okay, so that's all we basically do. Okay, so how do we calculate weighted average method? So basically, if a company had a 10 million loan, right, so of 6%, and a 2 million loan of 8%, right? So there, these are two different interest rates. So how do you account for that? So our total borrowing is 12, right? So that will be in our denominator, as you can see in the slide as well, right over here, right over here. And then uh, in case of loans, what we do is 10 million into 6%, 12 million into 8%, right? So basically this will give us a this much amount of your interest expense annually, right? So for this much total amount, the interest amount will be this much. So that means our average will be 6.33. Okay, so for, you could use this for any kind of your borrowing cost or anything relating to qualifying asset, you could use this rate now. Okay, so we made two rates into a single rate, right? So it's not like 6 plus 8 divided by 2. Okay, that's different. This is weighted average. Okay, so basically, see, this is being assigned weight is as 6%, this is being assigned weight is as 8%, right? So different weightage, and then you will get your average as a different amount. Okay, so it's basically a bit different concept than your normal averaging. Okay, so similarly, when will we basically cease to capitalize any amount? Okay, so the capitalization of borrowing cost will cease when substantially all the activities that are necessary to get that assets ready are complete. Okay, so basically what that basically means is that substantial, see the word over here, substantially all the activities, that means that the major works of the construction has been completed. Okay, so when does that basically happen? Is that basically when all of your major works, right, structural work, and then all of that main works are done, and then only you have like greasing of the machine if you're talking about plant, or like just a normal fixture of light is not working, just fixing it, that's a minor work, right? So you will stop capitalizing when the main works are finished. Okay, so similarly, when there is a suspension of active development, example will be basically during strike, right? So in case of strike, what happens is basically your active development work will be suspended. So suppose you have a 12-month period, and then your 1 month was basically stopped due to, let's say, coronavirus or anything, right? So 1 2 months, so you will be stopping the capitalization. So basically all of the all of the entities right now will be stopping their capitalization of borrowing cost. Okay, so in such a period when the active development is being suspended, okay, or the time period of construction is being elongated, okay, you could say it in that way as well. So, lastly, but the not the least, that we as an investor, when we are providing them with useful information, right? So, as an investor or lender or any other creditors, right? So, any potential as well. Okay. So, whenever we are talking about investors, we need to talk about current and potential investors, comma lenders, and then other creditors, right? So, lenders is your bank, right? And then after that, your other thing is basically your other creators, right? So vendors and all, right? So you need to provide them the financial information, and within that financial information you will need to provide them the disclosures such as the value of borrowing cost being capitalized during that period. So if you're overstating your assets, so if you capitalize, right, so during when the active work is not being done as well, that times what happens is that your asset will be overstated, right? So and then your loan covenants with that particular bank or other banks that you might have, right, so that can be breached. And then even for an investor as well, they might not see it as a higher gearing, right? So they might think that the assets is greater, right? Whereas that is just the capitalization cost being capitalized. Okay, so it's always good to be very careful whenever we are talking about borrowing cost as well. People randomly, just for the sake of easiness, what they basically do is they just capitalize the whole thing, right? So even it might be in their best interest as well just to capitalize it so that the assets will be overstated, right? So but that's not how the things should be done. Okay, and then the most important crucial thing that will be important is that the capitalization rate. So capitalization rate will be very crucial. So whether we are talking about specific or general borrow, specific is pretty simple, directly the rate given by the bank. If we are talking about general, always talk about weighted average, and you should know that it's not only just a plus b divided by 2. Okay, it's basically assigning weightage to a and then assigning weightage to b and then divide by 2, divide by the total amount. Okay, so that's how we basically should be calculating and disclosing this kind of information in our financial statement. Okay, so that's pretty much it, guys. I guess you have learned a bit about borrowing cost. So if you have any doubts regarding this particular session, please do comment down below. I'll definitely be happy to answer it for you. Until next time, bye bye.